guys, for joining the panel.
Thank you.
All right, so we're going to have 45 minutes together. Just one thing I'd like to say. I'm going to be asking questions to each of you, but I would like to encourage interaction. So if you disagree with someone, if you want to ask a follow-up question, please go ahead. This is not very formal. All right, so you two, we've already seen you. No need to introduce you again. But maybe, Santi, would you like to introduce yourself a little bit and how you're connected to this whole topic?
Yeah, of course. Hi, everyone. I'm the head of engineering at KPK. And I got to say that risk management infrastructure and trying to understand the possible risks and front-run them, it's a day-to-day thing, of course.
Thank you. What about you, Augustin?
Hi, I'm Augustin from Dialectic. We manage on-chain fund, market-neutral funds, and we are big users of Safe and Hypernative in our tech stack. We use it as a hedge, as a technological hedge to capture risk-adjusted returns.
Thank you. All right, so you just gave a presentation about your partnership. Maybe we could open, how does this tie into the way we could scale DeFi? How do you think this partnership that you have could help further now the scaling of DeFi? Rahul or Marshall?
Yeah, I mean, I could go with a very quick take. I mean, when you have your foundations more secure, I think it's just easier to just invest in scaling, right? I think what I pleasantly discovered over the years, including for my own previous startups, is that Safe just is right there to power your mission-critical infrastructure to manage DeFi protocols. Like if you launch a chain, one of the first things you want is liquidity, and that liquidity is being with DEXs and other protocols. They're all, most of them, the serious, really the world-class ones are operated with Safe. So I think, and it's not, they don't have the same requirements as a fund manager, quite honestly, right? And it's a very evolving landscape, and I think when we can establish this base pillars very strongly, and I think DeFi, which is built on top of it, can even scale much faster because it just gives people in the community that much more confidence.
Yeah, and I'd say we talk to a lot of financial institutions. Excuse me, I'm not feeling well. And a lot of them are scared, excuse me. And they're scared because they don't know what they don't know. They don't understand the inherent risks. They don't understand how to apply some of their workflows and controls that they have in the quote-unquote Web 2 environment to Web 3. But they're also enticed, right? Like they do want to be in this space. They see the potential for their business. And so, you know, kind of getting these types of tools, these types of reliable pieces of infrastructure that these FIs and otherwise can leverage, I think only helps, you know, scale Ethereum further. And frankly, like, I know we're talking about 100 billion as the, kind of the mantra, but you know, that's kind of peanuts in the grand scale of capital markets. And so I think if we want to grow the pie, we're going to have to get more and more traditional players comfortable, and it's stuff like this that starts to do it.
Thank you. So I think there's something really interesting in this panel. So we have KPK here, Dialectic there, and you're both users of both Safe and Hypernative, and pretty sophisticated users, so that's pretty cool. I'd love to start with you, Augustin. You told me when we were preparing that you're using Safe in a way that's a bit special. Can you explain this a bit more?
Yeah, so basically what we built on to allow for flexibility for us as asset manager to really capture opportunity quickly, what we built is we built a kind of Safe module that we call an executor, and that basically contains a Merkle root that represents all the action the module is actually allowed to execute against a Wayroll virtual machine, which is super generic, so we can do a lot of any DeFi interactions we want to do, like adding liquidity, taking a loan, all atomically thanks to this virtual machine. We embedded all of this in this Safe module, and it gives us the flexibility of really adding new integrations by just writing those new scripts we wrote in our own descriptive language that gets compiled and included in this Merkle root without having to write any pieces of solidity. So it allows for a lot of flexibility and atomic execution. Yeah.
Interesting. What about you, Santi? Do you use it in a similar way, or do you have something different? Can you explain?
Yeah, actually, quite resembles our infrastructure. We are at the heart of our infra. We have the a safe module, so the gross modifier, which enables us to deploy programmable on-chain policies, of course, and which in fact, on one side, it allows KPK to manage the DAO's treasuries or any treasury in a non-custodial way, but we also we ponder it as a firewall, because of course that we cannot execute any transactions that we haven't whitelisted in some sense. Function signatures we haven't scoped very granularly and understood exactly what we're doing. And with this roles modifier, with this safe module, we actually allow, we grant these roles to EOAs we use for the automations, and we end up executing transactions on behalf of the safe, but always with a very narrow scope, having very tight enforcement of what we can do and what those EOAs could do. So we always grant the minimum set of emissions to these EOAs for the automations, so that we know that even a hijacking of the keys wouldn't have any consequences. At least a position could be disassembled, for instance, but so conceptually it's actually the same. And in fact, the logic of our automations also lives off chain, because we only on-chain, we have the transparent on-chain policies, of course, and we have this control over what we can execute, but all the complex or simple logic lives off chain, and we simply leverage the filtering of this on-chain policy contract. So we're actually doing, I believe, pretty much the same.
That's fascinating, because I actually have one comment. I actually spent some time in Dialectic office. First of all, they have a wonderful office, super fun. One of the things that impressed upon me when I talk to teams like this is how customizable it can get, right? Like, and you'll really push the boundaries and really take what the design of what we're building to kind of like the next level. And I'd really, it's super inspiring actually, and to kind of like talk to how you'll push the boundaries yourselves as well.
Well, SAFE has been at the heart of our business infrastructure since the very beginning, so we had to learn how to leverage and make the most out of it.
Yeah.
And it's been funny.
So as you can see, there's a lot of love on this panel. So, Rahul, so these are, two examples of very sophisticated users who do this really well. But have you maybe some horror stories of users who are maybe less sophisticated and try to customize, but it doesn't go as well?
Yeah, I think
without naming names, please.
Yeah. We see like I don't know how many. I don't think many people know here, but like technically, SAFE has almost 24/7 support, and we get all kinds of inbounds that we're trying to help our users, and I'm probably the highest escalation of support, which I also jump in. More than happy to, this helps me learn as well.
Could we get you on the phone?
Yeah. I think like stories like from KPK and Dialectic, it really shows how modular and customizable SAFE is, right? And what we see is a lot of people try things in DeFi and the ecosystem that even we haven't heard of. But the thing is, when you add a module and add a guard and you start to operate Safe Wallet, and maybe it's not designed to really work with that. And we've seen cases all throughout, from DAOs especially. They want things like time locks or external recovery accounts and things like that. And it gets very difficult, actually. I see Franco here from my team who's on QA. He would have even more horror stories about how are the things we run through our quality assurance to kind of support it. But that's one of the biggest challenges we have is to kind of like say what we actually can support on the wallet interface versus what you can do with the contracts. And the wallet, what we support is much more opinionated, much more of a subset. But we see all kinds of issues like, hey, why is my CryptoKitty not be stuck, or because it has another module, versus I'm trying to do a vesting schedule with my team who has done a TGE, it doesn't work, and it's as such. But there's a lot going on in the SAFE ecosystem. But yeah, like we see all kinds of stories, but we try our best to kind of like support what we can on the interface. Yeah.
Do you have maybe any advice, if people in the room are thinking to kind of use SAFE in this more customizable way? Do you have any advice for them how to get started, or what not to do? Yeah,
I think one of the most underestimated and underused features of SAFE is actually a guard. It's quite simply. Like if you are operating tons of funds or very mission critical infrastructure, a guard is your friend, and we're more than happy to help people to kind of like get that going. But I think what we've seen is there's like a little bit of cognitive friction to kind of like get that going. But we're going to solve a lot of that going forward. But yeah, definitely look into transaction guards and also modules from, there's a huge open source ecosystem out there. Just talk to us, actually.
What about you guys as users? Do you have any advice for anybody who'd like to use Safe in a more customized way, based on your experiences?
It requires quite some expertise, but like combining those Safe module with the Wayroll tooling, that's you can really have very generic actions and really achieve incredible stuff in a restricted manner. Like you can restrict your Safe to doing particular stuff, but you can go really far with this.
Good. All right, so I'd like to move to another topic. So when I was talking with you, Santi, and with you, Augustin, so you both said the same thing, that for you guys, with the speed of DeFi and basically if you want to seize the opportunities that are there, as investors, you have to take decisions extremely quickly, actually quicker than as a human you're able to kind of deal with all the data that is presented. And both of you mentioned having tools that allow you to take these decisions much faster, analyze an amazing amount of data much faster. This is kind of the secret sauce to be successful. And you both mentioned that you developed pretty cool tools. I'd love to go over this a little bit. Maybe, Santi, you mentioned a tool called a disassembler. Can you explain a little bit why you created this tool, what problems it solves?
It's one of the categories of the automations that we've been developing. Not chasing yield or opportunities, but trying to be able to withdraw funds in case of emergency scenarios. And in fact, we're actually leveraging Hypernative alerts for that. Our automations engine is fed by multiple monitors. Of course, through the risk assessment process, we try to identify events, or how can we detect that something actually is going on, whatever that is. Because in some cases, we could actually get some grasp of some idea about what's actually going on. At the beginning, it's simple, for instance, but in many of the cases, in exploit, of course, it's very difficult to really understand what's happening. So our automations engine and the disassembler ones, for instance, are simply triggered by Hypernative alerts, by monitors, and they withdraw all the funds from.
If I may, I think KPK, you're the first Hypernative user.
Yeah,
right?
we were the first ones. Yeah, and we worked very closely with them. Richard is somewhere over there. He's sort of an expert in the Hypernative system, to be honest. But the disassembler, namely, we program these bots, let's say, so that they can empty all positions from a given protocol in light of something going on with whatever protocol it is or whatever system. We actually fetch the data for all the active positions and in a single transaction batch all the actions to withdraw from all of those positions, and always triggered by this alert system.
I think, Augustin, you're also working on some tools. We're going to get a bit more into the Hypernative and then how this flow works, but staying more on the kind of tools that you've developed. I think you also mentioned that some tools you're able to share these today.
Yeah, for sure. So basically, one challenge we had, like when we received some alerts from Hypernative, like touching an asset, saying it's under attack or like under a stress test. One challenge we had is like finding really what are all the positions that are actually exposed to that particular asset, and like given the composability nature of DeFi, it can go really far. One asset can be backed by another one, then can be staked on another protocol. So we built a kind of another way of indexing DeFi, like we represent it as a knowledge graph rather than having a flat view like you can see on traditional portfolio management system like DBank, for example. Here you could index it in another way, so you can really propagate the capital down to all the nodes that are actually exposed to your position. So for example, if you have a position on convex, for example, the easiest one, you actually have a position curve as well. Like if curve goes down, you also want to exit, and just for a visual, for a decision-making perspective, like you also want to have an idea of the exact dollar amount exposure you have on all those nodes, and that can go really far, all the way down to the Oracle level. For example, you want to know how many dollars do I have exposed to that particular smart contract that is a Chainlink Oracle. Like you want to know all of this and to be able to make decision really fast and in a programmatic manner. So this is what we build, like another way of indexing the DeFi.
And you're also among the first clients of Hypernative, right, at Dialectic?
Yeah, we were quite early, I believe. Like, yeah.
Nice.
Yeah, we face the same challenges, trying to understand how many levels you gotta go down. Let's say.
And it
Okay,
can go
when I
really
exit
far.
from Convex and from Curve, then perhaps you have some other tokens, and it requires some finesse
Yeah, exactly.
to properly understand all the dependencies and its research.
Mm.
And of course, it's filled with edge cases, as the nature of DeFi is.
Yeah.
Just out of curiosity, when you enter into a new position, like on average, how long does it take you to map all of the counterparty risk and down to every layer?
So we try to map it before. Like we track a bunch of other people that are really active in DeFi.
Yep.
Like, and when they enter a position, we decompose like where did the capital flow, what are the exposure, and then before we enter, we can really see like, okay, this position would have exposure to those nodes, and how does it fit in our current book? Because maybe we already have so much exposure to this smart contract, and we don't want to top up. Like we don't want to concentrate. Like it's a way of handling correlation, the risk basically. Yeah.
Mm. And maybe could you share a concrete example of one time when you got this alert, and kind of what was the process to actually exit with a concrete? Maybe you don't have to say names again, but I think an example would be great.
Yeah, I mean it already happened on like some exotic protocols on L2s, on some L2 that we receive an alert from Hypernative. We receive the alert from the webhook, then we use our safe module tailored with particular script to we map which positions are actually at risk, and then we send the order to our executor that is on chain. The executor is allowed to do this particular action because it's in the Merkle route. Then it exits the position, and it happened that we exited right before the hacks. So this happened. We dodged a bunch of bullets this way, but we are always aware, like the first layer of protection we have is actually the due diligence and the hyper diversification of the book. So in any case, the size of the position made sense regarding the book, and regarding the return it was providing. Hypernative is one of the last layer of protection we have right before the insurance, basically.
What about you, Santi? Are there some examples you can share?
So in our case, fortunately, our these assembler agents, they were not triggered, mostly because we are not exposed to exotic assets or even protocols. We, being in the capital preservation business for the DAOs, we only so far, or we've been interacting with blue chip protocols. After some deep due diligence, thankfully that, in a sense, makes my job easier, because we don't play with weird stuff.
And do you mind if I ask a little bit about the recent events with Balancer and the Gnosis chain and so on? Can you explain a little bit more what happened there?
Yeah, of course. That took place last Monday, 2 weeks ago, almost. And one of the very old contracts from Balance V2, the composable stable pools, it had a fluke in the rounding, mostly due to those contracts, those pools also holding the LP token. And well, the exploit took place almost simultaneously on mainnet and all L2s, and I guess nobody could be on top of that. It got us all by surprise, and to be honest, it wasn't a nice day. We have to understand what happened. We weren't able to react properly. We didn't get a Hypernative alert in that case. And well, regarding Gnosis chain, it's been discussed. See, Gnosis chain was affected Even though it was weird, because on Gnosis chain particularly, the attacker was not, or at least he didn't withdraw the funds from the balancer vault. On all the other chains, he actually deployed the exploiter contract, and then he withdrew the funds from the internal balance, but in Gnosis chain, they still remain over there. I honestly believe he messed up somewhere. And in fact, you can see that in the transaction history, he deployed multiple contracts, while on mainnet, he only deployed one single contract and then one other transaction. So on Gnosis chain in particular, he messed up, I guess, which is funny. But regardless, what's been discussed actually is whether a fork in the chain is in order, which is a very controversial decision to be made. The funds could be retrieved, of course, for all users, but nonetheless, it touches deeply the philosophical question about DeFi. To which extent do we want centralization to be the king, or do we want to have some control, some regulation? Because in the end, even the DeFi users that were affected by having the funds recovered, of course that they will be glad and grateful, but we'll be compromising some ideals. And it's hard to find a sweet spot in this trade-off. This actually is a heated discussion that's taking place these days, how to proceed. Of course, such a decision, such a call would be impossible to be made for mainnet. Or at least it would bring up, I don't know, these very sophisticated conversations and arguments that might not lead to anything.
Yeah. But and here the decision was taken to roll back the chain, or is it still in process?
So it is still being analyzed, since it's quite complex and it is not easy.
You can always have Gnosis Classic and Gnosis Main, right?
Yeah.
Okay, sorry for bringing the atmosphere down a little bit. Maybe I apologize. Maybe let's change the topic a little. So Rahul, when we were preparing, discussing this, you mentioned that you have this kind of mapping of the different risks that exist in Web3, and what are some examples of that and mitigation methods. Can you tell us a bit more about this?
Yeah, kind of like productizing security at the app layer is actually like quite interesting, but it requires a little bit, or it required us to kind of fragment the landscape a bit, like how security exists across different layers. So ultimately, we kind of fragmented in like maybe oversimplified in 4 layers. So you have this account level security, where's your multi-sig, and then you have signer level security of like how many signers you have, the threshold, the configuration, the policy, and then the transaction level security, and then the infrastructure security. So I think what we've seen is that what Safe does when we're investing a lot and where we're most in control about with is your account and signer and device and infrastructure security. So we can take a lot of ownership there, advance as much as possible. But quite frankly, when you take your Safe and you're interacting with the pool, for example, that's where the security landscape fragments, because then you need to have the knowledge about what you're interacting, what your intention is, and that's beyond some of this core multi-sig security. And once you, like say you're opening a position and you have some receipt tokens, now you have a position out there. That is a very different kind of security. Now you need monitoring on your position that is completely outside your account, for example. And this is why like our partnership with Hypernative really adds this and creates, we are just able to cast a wider net in overall. So there are different levels of risks. So for account level, you can think of it like, okay, you have 10 million in your account and you somehow operate a 2 out of 3 multi-sig, and we see that you are lowering your threshold and removing a signer. That is an immediate flag. That's something Safe can flag, or internal systems can flag very quickly, in real time. But when it starts to kind of like, okay, maybe you're interacting with a pool that has a compromise with a drainer account, et cetera, et cetera. And this is where like things like Hypernative alerts and having real-time monitoring and kind of like having a robust incident response. This is where we're starting to kind of like map these out. And like earlier in the presentation, I spoke about like security beyond multisig, and we just need to go wider and wider, and it takes an army. And I think it's also really gave us clarity on what we will build versus what we will partner, for example. And yeah, we just need to make this a very continuous risk assessment exercise, and start to invest in security a lot more than we have in general.
We'll never get bored.
We'll never get bored.
God forbid we can end up drinking margaritas at the beach.
Yeah.
So in terms of the risk that he mentioned, would you agree with that kind of framework? Do you think that some risks are, more prevalent than others when you analyze these?
I mean, we have a very similar breakdown of the risk. Like the first thing we just look at is also like just the access control of the protocol, and yeah, as you said, when you enter a pool, you give up of some kind of security, but then maybe it's controlled by either an EOA, then that would be a blocker for us, but by a safe, by another multisig, that's already a good sign where there is a time lock or all this kind of stuff on top of. Like, so we look at the access control, the oracle risk, the chain risks sometimes when we go to more exotic places. Yeah.
What about you, Santi?
Yeah, well, of course, the process is similar. We first start with financial assessment. We do where we need a deep understanding of the protocol, how it works, all the contract dependencies, all the contract interactions with other protocols. Of course, there's always a family of contracts, and it is tricky because we cannot audit all the contracts ourselves. We need to trust the audits, but as we've seen with the balance hack, for instance, that won't be enough, perhaps. But the due diligence process starts with fully understanding how the protocol works, how the assets flow, all the functions that are being called. It's a complex dependency network, and only when we have trust in our understanding of the protocol, the position, the pool, whatever it is, the composability levels, all the layers, and all the dependencies, which might increase in complexity as the composability increases. Only then we can say, okay, this protocol is fine to interact with, and we integrate the proper tooling to be able to either withdraw the funds or whatever we need to be able to front run risk scenarios. But I believe that process is they all resemble each other. It's the recipe for risk assessment in an ecosystem that is wild, and you can find, again, it's always edge cases, so you never get bored. You always find new things that make you think about new ideas, and it's race.
I think, risk kind of comes in different forms. I talked about this a little bit in the presentation earlier, but there's the obvious risks around smart contract risk, but on like say the compliance side, some firms may be a little bit more lenient with what they're willing to do from a compliance perspective as others, but it's still important to be able to kind of monitor, detect, and then action. And if you think about, I also talked about like the flow of funds, right? So before you literally do anything, you want to be able to assess who your counterparty is, like understanding what that looks like and having the tools to be able to do that reliably. Then in the moment of funds literally leaving your custody, what does that look like? Is it safe? Are you secure? And the relationship that we have with Safe in this integration, I think, is going to be a really interesting tool for that, no doubt. And then to these guys' points, right? Once you have funds on chain, making sure that you're able to monitor them and keep them secure with automatic withdrawals or whatever it might be is also important. So you have this like, I don't know, I keep saying flow of funds, and maybe that's not the right term to use, but in the moment as funds are kind of moving from standing still in the motion of leaving your custody and then finally on chain somewhere, being able to address risk in different ways.
Yeah, in terms of compliance, you were also explaining to me, so you work with actors such as KPK and Dialectic, but you also work with exchanges and so on, and you also have a tool to kind of look at this kind of fraud detection. Can you tell us a bit more about how this works?
Yeah, so one of the things that we do, and not to continue to repeat myself, but we're constantly looking at 70 plus chains in real time. So again, every contract that's deployed, we're looking at it, trying to understand, like, is this malicious? Is there's a scam network getting it deployed, so on and so forth. And so we're really good about kind of tagging these clusters and associating these addresses to malicious behavior. And as you've seen, like, fortunately, I haven't fallen victim to this, and hopefully nobody in this room has, but I've certainly seen in the headlines, like as you're, withdrawing funds out of your account on, say, Coinbase, or pick your favorite exchange, back to like your non-custodial wallet, there's been all kinds of issues with pig butchering, romance scams, and a lot of fraud that's happened there. And so we have a solution that's, I would say, exceptionally good at being able to detect whether or not, as money's leaving, the exchange, if it's actually going to somewhere legitimate, or if you're falling victim to some type of fraud.
Yeah, and you were mentioning you did some tests there, and you had an amazing kind of amount of success rate. Can you tell me the numbers again?
We did well, it's kind of serendipitous. We did a proof of concept with a top 3 exchange here recently, where it was an independent analysis, and effectively they looked at over a course of, I think, like 3 months worth of time, 3 weeks, excuse me, worth of time. They have 2 vendors currently that they use for this solution, and then, long story short.
Which are the market leaders, I think. No?
Yeah. We won't name names, but yeah. Basically, we found 20x more fraud than they found. So an order of magnitude better.
How do you know these are not false positives?
Because we did the analysis with the third party who went through that process to make sure that they weren't false positives.
Okay.
So it's not just us saying, hey, look at this.
Yeah. Okay. So we have a few minutes left. We have 15 minutes left. I'd love to ask, so we're talking about DeFi scaling here, how to scale DeFi. I'd love to hear your view. Let's imagine in 5 years, we've reached the peak of DeFi scaling. The world is great. It's everything we want. What does that look like? And what are the obstacles standing in the way of that? Who'd like to start? Augustin.
I would love to see a lot of composability, all the protocols being able to be integrated into other protocols, to really, not necessarily just looking at big TVL numbers, because with just tokenizing a T-bill you can go really far, but really to have the composability between all the protocols and the assets. And really also the off-chain tooling for operators, for asset managers, to really understand what is going on exactly on-chain. For stuff like also stream finance, would have been great to have all the tooling to instantly understand, the money should be here, but it's not here. Really understand where the money was flowing. And
Well, one factor that actually battles against this is the non-standards in Ethereum. Because again, you always find different implementations for even the actions, similar actions. I mean, composability, being able to interoperability and composability, of course, are the whole grail. But innovation, in a sense, makes that a little bit difficult.
Yep.
Because as new tools and new contracts and new ideas come up.
Yeah, having standards that are respected, that would also be awesome, because you could really understand from the outside how things are interacting together in a standardized way. Yeah.
But nowadays, each new protocol needs an ad hoc integration, and custom research. You never find, or it's hard to find resembling technologies, because of I don't know. You see more fun. What they build is amazing, but nonetheless, they have a whole bunch of new ideas in their contracts, and this is astonishing. But nonetheless, you need to, again, a new family of contracts that you need to understand to properly integrate them, and that's how it goes. And I mean, I welcome that innovation, but at the same time, it makes it hard to find a proper standard so that, data is being fetched in this way, and you know that it will always work, and the transaction building is done in this way, this other way. So it is tricky, even though
Yeah.
that scenario where
It's a real engineering challenge, but maybe also nowadays with AI, like you can also handle more stuff
Yes,
in a
that's-
generic manner, more adaptive. Like that could be one of the solutions.
You think AI will help standardize more the way people develop and integrate?
Maybe not standardizing, but maybe understanding. Like you could ask your AI companion to really go deep down and break down mechanisms and to come back to you with explanations and relationships between entities and DeFi protocols.
yeah, assuming we could trust the AI, perhaps we can get some
Yeah, that's
standardized
another-
prompting.
Yeah.
And because implementation agnostic, even though there's a long way to go.
So, if I understand for you, the ideal future of a scaled DeFi would be when people are really able to really understand and have kind of this almost perfect information. But on your side, it would be more standardization and having things fitting better together, like these money Legos.
But
Is
they go hand in hand because the composability is facilitated by the standardization. Without the RC20, it will have been a mess, and it's been a pillar of everything, even though we have many other protocols nowadays.
What do you guys think? What is the ideal future of DeFi scaling?
Yeah, I mean, maybe a boring answer, but I'll go a slightly different direction. I think regulatory clarity. And we're getting there, but we're not there yet. Composability within DeFi is awesome. Composability within DeFi in the real world, in my opinion, is even better. And again, with the conversations that we have with different financial institutions, they're just not comfortable at a large scale to interact with DeFi yet. And a lot of that has to do with regulatory concerns. So if we can get that ironed out, I think there's a willingness and an interest to be able to, enable some of that composability, but we're not there yet.
Yeah, probably from my side, even more boring answer, keeping it.
Don't take this
that
the wrong way, Marshall. Don't worry.
boring.
It's not you.
boring.
Maybe mine is a bit more idealistic, and I always have this continuously, which is I've recently been acquainted by this phrase called DeFi mullet, right? Like, which is it's fintech in the front and DeFi in the back. And I think I would love to get us to a stage. I would love this ecosystem to be in a stage where we don't have to refer to an asset as a real-world asset, for example, right? Like it just becomes second nature in how financial infrastructure is just upgrading, and we're starting to see that, I think. But like, yeah, like just the basic hurdles like regulation just impedes our evolution and growth. But yeah, one day we'll get there for sure. But we're making tons of progress already.
The DeFi mullet. I love that. Okay, so we're going to have to close quickly. Maybe one last thing. You came all the way here. I'd love to give you a little opportunity to shill whatever is it that you want to promote. Anything you want to share with the crowd before we...
I'm going to stay with the theme of the day. Go check out safe.global/SafeShield with the partnership that we just announced today.
I can go. Something we've been working on for quite some time, besides the risk creation enterprise, was approached by Ruka. At the beginning of next year, we'd be deploying our what we're calling OIBs, on-chain investment vehicles, which namely facilitate the way we manage funds for the DAOs, for the general audience. Simply sort of a vault that leverages our non-custodial infrastructure and a DeFi aggregator, in a sense. So that's coming soon.
Coming soon.
Yeah, thank you. So we are very excited about the vaults we started creating on Machina protocol. So now we really bring our technology and so far Dialectic has been managing like private funds and from professional investors, but right now we started creating those publicly available vaults, and the technology is now available for anyone to capture that yield.
I hear it's been audited by a really good auditor.
Yeah, indeed. Indeed.
Yeah, if I have one takeaway I would love for anyone in the audience to have from this side of Safe is that for the first time ever, we have an enterprise-grade product. And we're starting with Hypernative Guardian because that's where we find the most impact there. And And yeah, if you want to talk to us, interested in what enterprise grade safe means, yeah, we're here as well. A lot of us teammates are in our shirts as well, but yeah.
Thank you.
As long as we get you on the phone.
Right. Telegram?
Yeah, and me, I'm Emilie from ChainSecurity. We do audits since 2017. If you're looking for DeFi audits, please come to me or anyone from our team. Thank you very much for your attention, guys.
Thank you.
Thank you.
Thank you. Good job.